My name is Vaibhav Agrawal and I am a fund manager with Motilal Oswal Asset Management. So the funds that I manage, they're all very sharply positioned for growth and for valuation. So if we look at the broad themes that we're playing, we're looking at 5 major themes. One is financials. So financials are expected to lead the earnings growth in the times to come. And within that, we have 2 plays. We have banking, which forms the majority of financials. We have some capital market plays, and we also have some NBFCs, which are likely to do well. Furthermore, the other big theme is manufacturing. So in manufacturing, we're playing the entire gamut, of industrials, specialty chemicals, companies that benefit from PLI, companies that benefit from the Atmanirbhar Bharat theme. And we think that the companies that we have in our portfolio are very uniquely positioned for growth and are also available for reasonable valuations. The other theme that we are playing is infrastructure. So given the government's focus on kind of the the $5 trillion kind of package that they've given for infrastructure, and also given that we're in an election year, this is likely to be a major theme going forward. And within that, we are playing both EPC companies and companies that benefit from the supply chain. The other major theme is consumption, and within consumption, we are looking at both the staples and the discretionary segments. And both the spaces that we're looking at least the stocks that we have in the portfolio, are reasonably valued and are likely to have decent growth in the next 2 to 3 years as well. Furthermore, we also have some bottom-up stocks that we've chosen in the portfolio. These are very interesting kind of names that we have. These companies have shown a lot of resilience and great growth over the last few years and are likely to do well in the times to come as well. So overall, between the 4-5 major themes that I have talked about and some of these bottom-up stock opportunities that we've entered into, the portfolios are very well positioned to kind of perform in the times to come. Furthermore, we also have risk management processes that we follow. 3 essential elements of them are: one is to make sure that when certain stocks have done very well and valuations have become expensive, we make sure that we either trim our positions or kind of replace them with more attractive opportunities. The second is that in some cases when there is an external kind of externality which is there on the portfolio, because of which stocks correct disproportionately, at that point we choose to exit some of them so that it doesn't cause significant kind of capital loss in the portfolio. Third is position sizing. So both from a stock and a sector point of view, there are caps internally that have been decided by the investment committee. Furthermore, the liquidity risk of the portfolio is also assessed to make sure that no single stock or sector can affect the portfolio meaningfully. Now, coming to the market outlook, we believe that while the external environment continues to remain volatile and choppy, we think that this is a great stock pickers market. There are some companies which have corrected sharply. They're available at some mouth-watering valuations, and usually it is these kind of times of extreme pessimism that also create create the next leg of the bull market. So my view is that while we cannot predict exactly when the next rally or bull market will happen, but we think that the circumstances prevailing will ensure or will create the environment for the next leg of the bull market to kind of continue. And so that's why we think that the opportunities that we have entered into are kind of very well poised to capitalize on this whenever this happens. So yeah, I think that's it a little bit from my side, and thank you so much for listening to me.